All right, let's go ahead and get started. Welcome everybody to this week's Yummy Stock Market Review. My name is Bennett McDowell with TradersCoach.com. Great to be here. And today is December 20th, 2023. So next week, Christmas, holidays, and we will be back here on Wednesday, since Christmas now is on a Monday. So we'll be back in full swing on Wednesday. So please feel free to return here next week. All right, before I get going, Miss Yummy, any comments you want to throw out there?
Welcome, everybody. That's me. I guess Jean is Miss Yummy. Welcome, everybody. Of course, we always love when you join us for Stock Analysis Friday on YouTube at 8 a.m. Pacific time each and every Friday. And I think that's about it. Then I'll probably post a link for the YouTube.
Okay, super. Yeah, I kind of like Miss Yummy. I think that could stick. What do you think? We'll have to take a vote on that. We'll have to take a vote on that. Works for me. All right. Well, anyway, okay. So we're going to cover a few administrational items here. The market, I think now is probably poised for some more upside going into 2024. But we're going to talk about that. We could see that come to an end by the end of 2024. I've got some targets I want to share with you guys today based on the fact that things changed. The Elliott wave count changed when we went above the 2022 high. It went from a major correction only to a minor correction inside a longer term wave 3 for those Elliott wave fans out there. So we're going to talk a little bit about that as well. All right, great to see everybody here. Okay. So let's go ahead. First thing I have to go over are the risks involved in trading. And you know, this is important because the risks are really what lead us to using good and proper risk control in each and every trade. You can't cherry pick your trades, and you can't certainly decide on what trades you're going to use risk control and what you're not. Just use them on everything, okay? Risk control should be used on every trade because we really don't know the outcome of each individual trade. It's kind of like when you're at a casino. The casinos, even though they have an edge, they don't know what hand of blackjack, for example, they're going to win on, right? So they basically go with the odds, and that's what we do here in trading. So we want you to have an edge, and the only way to get that, of course, is to develop that and practice with it until you have it. But even when you have an edge, you have to use great risk control. Really super important. And also always trade with money you can afford to risk, called risk capital. Now, we're going to be looking at stocks today, and we're going to be looking at the overall market based on my analysis. So I want you to run by anything we talk about today before actually applying it with real money on your end. Run that by your financial advisor or whoever manages your money to be sure any stocks that we recommend, for example, are suitable for you. I don't know your personal situation. They do, so they can help you make that assessment. And also, past performance does not guarantee future performance when dealing in the markets. And also, to make sure that you, again, calculate your trade risk on each and every trade. Okay, we deal in a realm of probabilities. So even if you have an edge, doesn't mean you're going to be right all the time. All right, I got two really good books on money management. If you need help in that area, Money Management for Traders, and a more comprehensive book called The Trader's Money Management System. So those are available for you. The Money Management for Traders is a newer book that came out last year. And what I did was I took the principles of what we do in the markets in terms of risk control and put that into a really easy to use format. The Money Management for Traders on the far left, which is an older book, is never outdated. Okay, the concepts in that book are good, should be good till the end of time in the markets. So that's okay, and you can certainly read that as well if you want a deeper dive. I've got Elliott Wave Techniques Simplified, published by McGraw-Hill. My new book, The Art of Trading, coming out in 2024 by Wiley. Okay, so those books are all available for order, and you can go to our website and check that out. All right. Couple announcements for this week. These are the economic announcements coming out. I'm just going to start with Wednesday. Existing home sales coming out. Home sales are kind of, they say they're picking up a teeny bit, but you know, it's seasonal too. This is the winter months, so you can't expect much from that. Interest rates, I think, are easing a little bit on that. So that's getting things a little percolating. That's kind of interesting. That'll extend the bubble even a little further into 2024, I think. Thursday, initial jobless claims coming out, GDP and U.S. leading indicators. Friday, boy, actually a busy day for Friday. Friday's usually the slowest day. Durable good orders, all right. Durable goods minus transportation. Our personal income, personal spending, PCI, core PCE. I'm sorry, PCE, not PCI. PCE and then PCE year over year. Okay, a lot of that. New home sales and consumer sentiment coming out as well. All right, so new home sales, they're still buying down. The home builders are still buying down interest rates. So those tend to be pretty good. I can tell you the area I live in here, they're building like crazy still. So pretty interesting. All right, here's my new daily chart. And this is new for this week. All right, since we went above the old high here, basically what I'm doing is indicating that on the daily chart now, we have a new target up in this area here for 2024. I believe we'll get there, 40,405 up to a possible extended area of 47,502. Okay, and it also can go 15% of the time, it goes a little higher, maybe a little shallower at times. All right, so what does this all mean? Well, it means that this correction here never developed into a major correction on the long-term chart. However, it was a correction on the minor chart here called the daily chart. So we're still in, we're in wave 5 on the daily, but that puts us still in wave 3 on the weekly. So when we get to this target range up here that I just told you about, that should also be a high now for the wave 3 on the daily. Now, when is that going to get there? Well, it's hard to know that exactly because the market goes through periods of moves towards the target, interrupted by profit taking, and then more moves up. So something kind of zigzaggy like that, which is, you know, basically how the markets work. I think we're probably due overall for a fairly significant pullback here, probably in the early part of maybe January-ish, 2024. We'll get a pullback. Could go as low as, 33, 34. So, pretty decent. I mean, we've had a big run up. So any move back to an inflection point would be kind of normal in how the market operates. So I wouldn't be surprised if we see that. I do not think that will represent the end of the bull trend. I don't think you're going to get that, okay? I think now it's basically has told us what it's going to do, and I think is going to go up into that wave 5 target zone. Now, the implications of this is one of complacency, okay? It's very easy to get sucked into the market. Will go up in 2024, so all in, that type of thing. I still want you to be careful because guess what? When we get to this area here, then the clock starts over just like it did in 2022, where at that particular point, we can expect a major correction on the long-term charts. And so that's looming out there still. That did not go away. That just got delayed. I think that's an important thing you need to take away from this because it's going to happen. The question is, when? Is it going to be the latter half of 2024? Is it going to be is 2024 going to be another bull year and this major correction is now pushed off to 2025? That's possible, all right? So we're going to have to see, all right, when we reach this target zone. And then we'll have a better idea of the strength of the market when it's in the target zone to kind of get an assessment on how much further it's going to go, so to speak. So I think this is probably pretty good. Now, again, if you followed my Stock Analysis Friday or if you're in my more subscription area, all our stock trades for the most part have been to the long side. All right. Any ETFs, the inverse ETFs have been stopped out. Okay. So don't, all your inverse ETFs probably a good idea to get out of those. That would be my recommendation. Again, talk to your financial advisor. Will we go back into the inverse ETFs? Sure. When we're at the wave 5 target zone, we see a reversal. But for right now, you don't want to have that kind of pain of being short this market if we have a target zone still pretty significant, okay? So dump, my recommendation again is to dump all the inverse ETFs and enjoy the trend. And in the Moore report, you know, we've got many long trades, and also in all our recommendations have been to the long, even though we thought we were in a long-term correction. We always go with the trend on certain time frames that we trade. And so that's always important. Follow the market, and you can have an opinion, you can have a forecast, but go with the trend. That's really important stuff. And so I think we've done a pretty good job with that and keeping everybody fairly profitable to the long side. So any questions on this? That's kind of looking like where it's going, okay? And I think, you know, you're going to see a follow through in the S&P and the NASDAQ too, all right? They have not broken their all-time highs, but I think they probably at this point now will. They're very bullish at this point. So I think probably that's an indication that will happen. I'll be surprised if it doesn't. And certainly that's, you know, it'll be interesting. Maybe we'll reach wave 5 target on the Dow and the others won't go up as much. Is that possible? Sure. I doubt it. Okay. That's my feeling on that, simply because the NASDAQ is such a representation of this bullish market. Okay. So I imagine it will take out its highs at some point. It ran up earlier, it just may be a little bit delayed, okay, on that. All right, so that's kind of where we're at now on this. Let me just see if there's any comments here. All right, okay, Jim's, neither the S&P or the NASDAQ. Okay, there you go. I've broken the highs yet, and I just addressed that. Okay, so there you have good observation on that, because that's true, okay? Very true. All right, now, the other thing too, and I'm going to throw this out there, is that there are exceptions at times to Elliott wave rules. And one of the exceptions here is that sometimes you can get a complex correction, long-term complex correction, where you do slightly go above wave 3. And so that is a possibility, however, a very small probability. Okay, it doesn't happen much, but doesn't mean it can't happen, because anything's possible. But I'm not going with that particular complex wave correction count because the probabilities are so small in it, okay? So I think the fact that we broke this high here is pretty significant, and I wouldn't be surprised if it carries over into 2024. But I do think we're going to get a pullback, and I think the pullback could be 1,000, 2,000 points maybe. Okay, on this, so and that would be a normal pullback since we've been in this move pretty much for the last couple months to the upside. Okay, so that's kind of where I'm at on that. All right, so expect a profit taking pullback. All right, 60-minute chart. Ooh, one more thing on the daily chart. Notice we have a green PTF, all right, and a green owl, and a pretty good momentum. And we're seeing a little bearish divergence on this move up, but it's still pretty strong as of Sunday. So when I say expect a pullback, doesn't mean we can't go higher for another couple of weeks. It's just heads up because it's probably coming. Now, again, we have a PTF, but you know, all we have to do is go above this high here, and that PTF will turn yellow. So it's not a significantly high PTF, if you know what I mean. All right, so any questions on that now revised forecast? Any questions on that? All right, if you do, just feel free to chime in here. All right, so here is also the updated weekly Dow Jones Industrial Average chart. And again, the actual wave 3 high on this is a little higher than the daily. So that means the daily would have to get up into the upper ranges of its wave 5 target zone, or we may just miss this one a little bit. So, but you can certainly see that we may have a significant move now back to the upside. The other thing to watch for is this, okay? We want to see if the PTF turns green, because that is something I want to keep an eye on. So the fact that it's red and we're making new highs indicates that the long-term correction is not yet in place. And so if this stays red, then basically it's saying when the long-term correction comes, we should go below the COVID low, which produced it. All right. However, if this thing soars and turns it green, that means we'll probably not go below the COVID low, and we'll have to redraw the fib retracements, and they'll probably be slightly above the COVID low. All right. So when we get to that period, we won't be able to do that until probably the latter part of 2024. Okay. Unless something drastic happens. All right. The other thing too that's kind of interesting here is that, you know, the complacency that I talk about. Now I think we're going to get it. I think people are going to see new highs in the market. They're going to feel probably after the next correction and another pull up, if that occurs, then that will basically solidify people feeling comfortable in the markets for longs, and it will be smooth sailing, and that's exactly when the correction will hit. Okay, so just be aware of that and keep coming here, and we'll cover it as well. All right, now once again, I like to cover the housing market, and here is the Case-Shiller versus the CPI. So on this graph here, this is the Case-Shiller in red, okay, and this is the CPI here. And the bottom line you want to take away with this is that bubbles occur when the Case-Shiller Home Price Index, and this is for the United States, all right, super exceeds or gets far away from the CPI. So think of the CPI like drawing a trend line on a stock. And when prices get, you know, pulled like a rubber band away from that trend line, it snaps back. And that's kind of what happened in the 2008 financial crisis. And then interest rates got really low, and you know, you had the bottom and then the turnaround in the market, and then they cut interest rates again, and everybody with COVID moved out to the urban areas, away from the urban areas rather, and bought homes, and interest rates again went almost down to zero, and then boom here. Now notice it's still, okay, in a bubble. We have not seen a pullback significant enough to say the bubble is over. In fact, we had a little pullback here, and now prices have gone way back up. Now, what's interesting here is the CPI has also jumped up, okay? So the inflation index has also jumped up, but that distance from the CPI to the Case-Shiller has remained the same in terms of from here to here. So basically, you're still in a bubble, okay? And it's hard to know when the bubble will end. Again, maybe this will extend itself, and when the market eventually corrects, this will correct, but it's due. All right, so it is due. Now, what's interesting is I have another chart here. Let me just put this out here like this so you can see it better. This is home prices versus income, okay? And so this is the mean of that situation over time. And basically, according to this at RE Venture Consulting, home prices are 31% overvalued, okay? So this chart came from them, okay? And it's just indicating, I want to give them their fair due, of course. And it's very interesting because, again, it usually snaps back to where people can afford homes. So you've got not only the Case-Shiller and the CPI indicating a bubble, but you have home prices just versus incomes indicating a bubble as well. All right, so, you know, the market is definitely, both in the real estate and even the stock market to some degree, is overvalued, but things can remain overvalued for quite some time. And we'll see what happens with that. So I wanted to share those stats for you guys so you can kind of take a look at things and make your own assessment. But I think basically the housing market is due for a correction. So, you know, you kind of want to be careful about buying homes at this particular point. And if history proves any type of factor, which it usually does, then you may certainly be overpaying for homes at this point. Okay. All right. And here are the live charts right here on the Dow. Okay, you've already seen this and seen that, so that's no surprise. The S&P, like Jim had said, has not quite reached its high, but I expect it to take that out pretty soon. Probably, maybe we'll even take it out before we get the pullback. Okay, got a green PTF here. We're so close already. And NASDAQ's got a little bit more distance to travel. Oh boy, I got a bad price bar there. But again, this is heading up too. Okay, so I see no reason for these not to be breaking out. All right, which takes us to the crypto market here. All right, let's take a look at our crypto buddy here. Okay, again, you know, like I said, I'm bullish long term on crypto. We're due for a pullback here too. But hopefully you got in under the $10 mark when we first recommended it, and that's done real well. All right, if you wanted to ratchet up your stops, okay, and take profits and get back in on the next correction, okay, you could do that. You could also stay long on this. I think it's probably going to take out 60 bucks at some point here, okay? So we're at 36, so I think it's got a lot more room to the upside. So I'm pretty happy with that. All right, let's take a look at gold. And that goes for Coinbase too and Riot. Okay, same thing, blockchain. All right, so gold coming down. We still got a green PTF here, okay? I think probably we're getting fairly close to I think a 220 to maybe 240 is a top possible on gold here. So we've moved up to the roughly almost, not quite 200, but getting darn close. But we probably will get a little pullback in this at some point before it surges forward. And, you know, my only concern with gold is when Costco sold $100 million of it, that's usually the kiss of death when it goes public like that. It's kind of like back in the realm, if you remember, in the early 90s, late 80s, if anybody wanted to be a stockbroker, it was really hard to get into that business because there was so much money in it. And then in the 90s, they were starting to put ads for people to come be a stockbroker. And things switched because at that particular point, it was, you know, money under assets instead of commission. And all they wanted at that point were order to salesmen, okay, to get out there and bring the assets to the firm. So being a, you know, stockbrokers, while they do okay, never made as much money as they used to. And so when anything goes public, my point here is anything goes public, it's usually done. Okay, that is just a rule I kind of live by. So if they make it that easy to get gold through Costco, then you're probably getting in near the top. That's my only concern with that. So I do think it has some more room to go. You just got to be really good at timing it to get out, and the general public will not be. All right, and so silver is the next one to look at. Another interesting market is starting to show promise to the upside. We've got some green here. I'd love it to break this area here, okay? I would get really excited if it did now. I may start recommending this one now that we have the green PTF finally here. All right, so I may look at this pretty closely as a recommendation this weekend. So I'll let you more subscribers know if I think it is good now or not. It's getting close, if not quite. But I'm seeing a lot better presence here than I did a month ago. Okay, so that's a good thing. TLT, the bonds, all right. Like I said, we're kind of seeing a move to the upside. I'm watching the PTFs on the weekly. I'm not going into this until that PTF changes on the weekly. So, you know, we'd seen this before, like I've, you know, told everybody before, we've seen this before. This kept me out and then it rolled back down. So we could get one more roll down before it turns. Or if the PTF's wrong, which it is 25% of the time, we may see it go from red to green on the weekly. And if that's the case, then I'll look for an opportunity to get in. And so we'll take a look at that. All right, UNG, natural gas and oil I want to take a look at here. So natural gas is one of these that's been bouncing around and took out its bottom again. Still a red PTF on the daily, so I'm not ready to commit to a long position again on this. All right, so let's let this bottom and then we'll take a look at it again because I do think it'll be a heck of a buy at some point, okay? But just not right now. USO, which is our oil market, seems to be now rebounding a little bit to the upside. Okay, it certainly went down pretty hard, but if you look at this here, it did not take out the bottom over here that we were watching. Okay, so even this particular rebound here, all right, if we extended it here, okay, it did blow through here, so that's probably an indication of a two wave of some type, all right, and we're probably going to go on up something like that. Okay, so I'm still bullish on oil. You just got to have that stop long term away from it. And of course, if you rode this leg up here, the art software had you out already. Okay, so no worries there if you traded it short term. If you're long term, you got to keep that stop at the very, very bottom. All right, so that's kind of that for there. All right, we got about 4 minutes, so I like to open it up. How about we do one stock a person up there? And if you know, and you can do another stock if you want, if nobody else types it in. But that way, we try to get people's picks in before the half an hour allotment there. So feel free to type in a stock if you want me to look at something here. Okay, IWM. Okay. All right, moving up pretty nicely here at this particular point. We may have a situation here where, again, all right, we haven't taken out the all-time high, all right, but it certainly is starting to break out here. Okay, so that's a good sign. So I'm liking that since the market dynamics have changed. Okay, I'm liking that now. And also we've got green here. So I think probably you got two choices here. You can either go long immediately, and let's see what our target would be there, because this would be a long-term target now. Okay, so you got to remember, if this is going to be right up there with the other markets that we've looked at. So basically, quite a bit of room move, 292 to 374. All right. If you're not wanting to trade it long term, it's too extended. Okay. Wait for the pullback. You got a 3 here, so wait for a 4 and then pull the trigger here. Okay. That's how I would play that. All right. Let's see what else we got in here. All right, Jim, how are you? KBE, it's a bank ETF. Okay, KBE. Yeah, we haven't looked at that one. That's a good one to look at. All right, so moved up recently. We have a PTF, but it's very close to going green on the weekly chart. So that's interesting. Probably, Jim, it's like the day trading room. I don't know if you're in it already. If you're in it, you're in good shape. You can stay in it. If you're not in it, we're probably better off waiting for a pullback. Okay, kind of like what we do in day trading. Okay, doesn't mean it can't go a little higher. Okay, but the problem is that it's a little bit like Russian roulette, figuring out exactly how long you'll be in this and how much higher it will probably go. Let's see if it's due for I'd say it's due for a pretty good pullback here. Okay, a little higher short term, maybe one more high, maybe you'll get to 48, 49, but I don't know if that's worth the trade, that type of thing, because you'd have to put your stop probably at 42 or under. Okay, and it may pull back even before it does that. So you could try it if you wanted to do a short term quickie. But I think the better trade would be to wait until it pulls back and then see. And again, the problem is the only way I'd go long on this is if the PTF stayed green on a big pullback on both on the daily chart at least. Okay, because you still got a red PTF on the weekly, so it's not a long-term buy at this point. It would only be a short-term one if we get a pullback and we had a green PTF on the daily chart. All right, so that's that on there. All right, so let's see what else we got cooking. Anything else? Okay, good. All right, so hopefully that kind of gives you a little insight into what I'm thinking for the markets over the next, I would say probably at least half a year to a year. All right, and we'll see. we got to pull back. We got to weather first, and I think that will be very telling to see how much of a pullback we get, and then if we get new highs after that pullback. So we'll keep an eye on it, but I kind of think we will. All right, so there we are. You guys have a great week, and I guess Merry Christmas, Happy Hanukkah, whatever you celebrate. Have a great one and a safe one with your family. Fun time of year. Hopefully the weather won't disrupt traveling too much, right? And we'll see you back here next Wednesday. So happy holidays, everybody. So Gene, back to you. Oh, Gene must be on the phone. Okay. So I will go ahead and say goodbye to everybody, and we'll see you back here next week. Bye-bye.